All right, welcome back everybody. My name's Austin. Today I want to update you on the latest news involving Ethereum, Bitcoin, Yearn Finance. So check the timestamps like right now down below in the description, and let's jump in. Michael Saylor, CEO of publicly traded company MicroStrategy Solutions, dropped some absolute Bitcoin fire. Great perspective on CNBC this morning with Melissa Lee. If there is a question on where this market is going, watch this full clip. Listen to CEO Michael Saylor articulate why investing in Bitcoin a few months back was one of the best decisions his company made, why these next immediate 5 to 10 years for Bitcoin will be institutionally driven, and why it's inevitable that the big companies, the Facebooks, the Amazons, the Googles, eventually allocate a portion of their treasuries into Bitcoin. Watch this. Let me know what you think.
Let's bring in Michael Saylor, CEO of MicroStrategy. Michael, great to have you with us.
Thanks for having me.
We had you on because you're the CEO of a software company who decided to invest your cash into Bitcoin. And I'm wondering how you came about that decision. Were you thinking we've got a lot of cash because our business generates a lot of cash? So, could it be treasuries or money market, straight up cash or Bitcoin? I mean, what was your thought process?
Well, the story here is, due to the rapid expansion of the monetary supply by the central banks, the cost of capital has tripled from 5% to 15% over the past year. And if we look out over the next 4 years, bond coupons and EPS growth rates are going to need to exceed that hurdle in order to preserve wealth. We had 500 million worth of cash, but we knew we were going to generate another 500 million worth of cash. And we realized that if we held it in cash, it was going to debase by 10, 15% a year, and I didn't want to lose half of it. So what isn't so well understood is the BTC. Bitcoin is the best safe haven treasury reserve asset in the world right now, and it's engineered to be superior to gold in all aspects. So that being the case, a lot of people understand the asset story of Bitcoin. It's up 100% annually each year for the past decade, more or less. Mm-hmm. What they don't understand is that Bitcoin's a monetary network. And as a monetary network, it's capable of storing and channeling energy over time without power loss. So we got really excited about this idea, and we saw it as a solution for the store of value problem, not just for the $300 trillion of capital in the world, but for the 7.5 billion people on the planet. And so that's pretty compelling.
Mm-hmm. Sorry to interrupt, Michael, but cash on a balance sheet and wanting to preserve the power of that cash is one thing. Investing it in something that's speculative is another. I mean, are you a software company or are you a Bitcoin hedge fund at this point? I mean, why bother with the software part of the business if your belief truly is that Bitcoin is going to go up 100% every year, going forward?
Well, first of all, we do have a software company generating cash, but if we simply swept the cash into fiat currency and allowed it to debase at 15% a year, we'd be losing as much on the balance sheet as we generated from the P&L. So that didn't make sense. On the other hand, the traditional concerns about Bitcoin have been that it might be hacked, it might be copied, it might be banned. And after a decade, it hasn't been hacked. No one's managed to copy it. It's not going to be banned. So although people look at it as being volatile, it's volatile maybe in the first decade. The next decade going forward, it doesn't look like it's going to be that volatile. It actually looks like it's emerging as the primary treasury reserve asset for people that are looking for some way to avoid the great monetary inflation.
How do you view, though, the size of your Bitcoin position relative to the size of your business? And is there a point at which, even just for portfolio management purposes, you trim your Bitcoin position in order to be conservative? I mean, your enterprise value is, $2.4 billion or so? I'm not sure what your Bitcoin position is. You initially invested $400 million or so back in August, and that position's got to be enormous by now.
Well, look, we love the enterprise business intelligence business, and we want to be in it, but we don't want to decapitalize the company by drawing our treasury to zero, and we don't want to allow our treasury to be debased by 10 or 20% a year either. So we had to do something. I think that as investors start to understand the Bitcoin story, they're going to migrate their capital on the Bitcoin network, and that's going to create a virtuous cycle of adoption, followed by price appreciation, followed by value accretion, followed by technology integration from companies like, you see Square and PayPal. It'll be Apple and Google shortly. That's going to drive more adoption. And that means that you really want to plug your company into the Bitcoin monetary network, right? It's probably the biggest thing that's happened over the past decade. It's going to be bigger than the FANG stocks. It's going to be bigger than Apple, Amazon, Facebook, the social networks. And it's the ideal time to plug into it, because 99% of the investors don't understand what I just said. And with $350 billion of monetary energy in the Bitcoin network, it's all but unstoppable at this point.
Okay, great clip. Give me your thoughts down below in the comment section. Melissa Lee, sort of representing everybody's skeptical family member around the holidays. But let's keep going. Next piece of news for Ethereum. As we mentioned yesterday, Ethereum 2.0 is a go. The Genesis day is officially December 1st as planned. They received the minimum number of deposits in the deposit contract. They needed a little over 500,000. Right now, there is over 700,000 Ethereum locked up for at least the next 2.5 years in ETH 2.0 contract. And it should be noted that if you are wanting to stake your ETH, you didn't have time, you didn't get a chance, you can still deposit at any time. That hasn't changed. They've just reached the minimum. Obviously, they would love more security on the network. They would love more Ethereum locked up. So let me know where your head's at with this. But let's keep going. If you are an ETH holder, the last thing I want to mention, when this goes live, Phase 0 goes live on December 1st. What does this mean to you? Well, Phase 0 lays the heavy-duty foundations, meaning signatures, Merkleization, networking, ETH1 deposits, randomness, proof of stake, etc. I'm not a coder, but this is essentially just the basic foundation. Many of the upcoming hard forks in later years will layer relatively thin infrastructure on top of these foundations. Awesome. Well, now that we have Phase 0, when can we expect the full Ethereum 2.0? When asked for a rough date for Ethereum 2.0's launch, Ethereum 2.0 researcher told CoinDesk that he had been at times both too optimistic and too pessimistic, so his target should be taken with a huge grain of salt. That said, Drake anticipates that Ethereum 2.0 could be feature ready by mid-2023. Interesting. What will you be doing in mid-2023? Let me know. Next piece of news. Coinbase, citing regulations, ends their margin trading services. So how this affects you is that this is a big insight into what the regulators are doing. Citing guidance from the Commodities Futures and Trading Commission, CFTC, Coinbase said there will be no new margin trading starting on November 25th. It added that the product will be taken offline completely in December once all existing margin positions have expired. And why are they doing this? In a direct quote, "We believe clear common sense regulations for margin lending products are needed to protect and provide peace of mind to U.S. customers. We look forward to working closely with regulators to achieve this goal." So what this says to me is they're closing this down for now until the CFTC gets some clarity with the regulation. So watch out if you're a U.S. person trading margin on any exchange. And of course, before we get to our final piece of news, gotta support the sponsors. Like the sponsors, they support us. Let me share with you 60 seconds on Blockfi. Blockfi offers traditional banking services to crypto investors. So basically, you can put your crypto to work, earn up to 8.6% APY with a Blockfi interest account. So you can earn some passive compounding interest on your cryptocurrency every month. And if you sign up with our link below right now, you can get up to a $250 crypto bonus with a deposit of $25 or more in crypto. And question, is it secure? Or how secure is it? Well, they have backing from some of the biggest names in custody in crypto, backing from Coinbase Ventures, Winklevoss Capital, Morgan Creek Digital. So of course, along with security, their focus is trust and transparency, but also they comply with all state and federal regulations. So you can feel good. You can earn interest on your Bitcoin, Ethereum, Litecoin, or your vast number of stablecoins, including Tether, Gemini Dollar, USDC, up to 8.6% APR. So a vast array of options. Again, link down below. Get up to $250 in a crypto bonus with your first deposit. Okay, next piece of big news for Yearn Finance holders. Yearn Finance has officially absorbed Pickle to boost DeFi rewards. And you may remember Pickle Finance just got hacked. It's another one of these yield farming protocols, and many people called Pickle dead. Yearn has announced a partnership with Pickle Finance to bolster yield farming incentives and compensate victims of the recent Pickle exploit that resulted in the loss of almost $20 million in DAI. And these are very similar protocols, so in that way it makes sense. According to founder Andre Cronje, the move is designed to reduce duplicated work, increase stabilization, and leverage shared expertise. And Pickle Finance vaults, or pickle jars as they're known, are cloned versions of Yearn's version 1 Y vaults, so the code is very similar. So what's the end goal here? Because if you hold Wi-Fi token, or you're a yield farmer, you ultimately just want more of a return. The end goal is to bolster returns for yield farmers with Pickle strategies, earning increased performance fees under the new Yearn fee structure. So it looks like the best of both worlds. But this did raise some questions. Some have questioned whether there should have been a governance vote on the decision, but Yearn team member Trace explained this would not be necessary. He stated that creating new Yearn vaults, such as newly merged pickle jars, as they're called, are completely permissionless, so no voting is required. So I guess anybody can do it. And of course, with Yearn Wi-Fi with Pickle, your rewards are in Dillcoin. Anybody bullish on Dillcoin? Anybody hungry? Okay, that is the video. My name's Austin. See you tomorrow.